In a crypto market obsessed with speed and hype, one blockchain has taken a different path. It did not chase headlines. It did not rush to launch unfinished products. And yet, it might be the most important layer 1 in the world right now. That blockchain is Cardano. And in 2025, it may finally be time to pay serious attention. Let us start with where we are. The macro backdrop in 2025 is shifting again. Bitcoin has just crossed the $110,000 mark after sustained institutional inflows. Ethereum Layer 2s are battling for dominance as fee compression accelerates. Real-world asset tokenization is going mainstream. BlackRock, Franklin Templeton, and JP Morgan are all running pilots on blockchain rails. And quietly, behind the scenes, Cardano has positioned itself as a serious contender for this next phase of blockchain utility. Not with noise, but with architecture, academic rigor, and an ecosystem built for long-term impact. But how did we get here? What is Cardano really solving? And why does it matter right now? Let us break it down. Cardano is a third-generation Layer 1 blockchain. It was founded in 2017 by Charles Hoskinson, one of the original co-founders of Ethereum. But from day one, Cardano chose a radically different design philosophy. Every element of the protocol was built through peer-reviewed research and formal methods. That means every upgrade, from consensus to smart contracts, is grounded in mathematics, verified by cryptographers, and stress-tested before implementation. To many, this seems slow. Too slow. But that patience is starting to show results. Cardano's consensus mechanism, called Ouroboros, is a proof-of-stake protocol designed to be energy-efficient, secure, and globally scalable. Unlike many other chains, it was not forked from Ethereum or built on borrowed infrastructure. It was built from the ground up, in multiple stages. Byron, Shelley, Gauguin, Basho, and now Voltaire. Each one unlocked a different layer of capability. And in 2025, the final era of Voltaire is going live. This is where Cardano becomes fully decentralized, with on-chain governance, treasury allocation, and self-sustaining funding mechanisms. In other words, Cardano is about to become a blockchain republic, governed by its users, funded by its own treasury, and maintained through democratic consensus. That alone is a milestone worth watching. But here's where the story takes a sharp turn. Because while most blockchains in 2025 are still chasing yield, Cardano is quietly onboarding governments. Yes, governments. In Ethiopia, Cardano is already deployed as the backbone for a national education identity system. Over 5 million students are registered on-chain using Atala Prism, a decentralized identity protocol built on Cardano. This is not a demo. This is not vaporware. This is live infrastructure. And it is just the beginning. Cardano has also signed partnerships with Rwanda, Georgia, and Mongolia for agricultural tracking, health record systems, and supply chain logistics. While other chains are debating meme coin listings, Cardano is signing memorandums of understanding with ministries of education and health. The contrast is stark. And it speaks to a deeper question. What is the point of blockchain? Is it just financial speculation? Or can it actually rebuild broken systems in the real world? For Cardano, the answer has always been the latter. Let us look at adoption through another lens. In 2025, the Cardano ecosystem has grown quietly but significantly. More than 1,500 projects are now building on Cardano. Over 30 million wallets have been created. More than 70% of the circulating supply is staked, one of the highest in the industry. That level of participation tells us something. It tells us the holders are not just speculators. They are participants in a long-term vision. And now, with the launch of Mithril, a light client protocol that brings secure off-chain data to Cardano, the chain can scale even further without compromising security. But adoption is only half the story. We need to talk about capital, because smart money does not chase hype. It chases infrastructure. And Cardano is beginning to attract serious institutional attention. Input Output Global, the research and engineering firm behind Cardano, has established dedicated investment arms focused on African innovation and Cardano native projects. The Catalyst Fund, Cardano's on-chain treasury, has now surpassed $1 billion in available grants for ecosystem development. And in late 2024, Emergo, another core contributor, launched a $200 million accelerator fund focused on Asia and Latin America. This is not retail speculation. This is long-term capital backing a slow but scalable thesis. The thesis that Cardano will be the blockchain for public infrastructure in emerging markets. It is a bold bet, but it is not without challenges. Let us talk about risks. Cardano has always been controversial in crypto circles. Critics argue that it is too slow to innovate, that its adoption is mostly theoretical, that its development roadmap is too conservative for the pace of the space. And there is truth in some of that. Cardano has missed deadlines before. Its ecosystem dApps still lag behind Ethereum and Solana in daily active users and total value locked. Its interoperability tools are still being developed. And in a market that rewards speed, Cardano's methodical approach can feel outdated. But this is where perspective matters. Cardano was never trying to be the fastest chain. It was trying to be the most resilient. And in an era of frequent hacks, unstable bridges, and broken governance, that trade-off starts to make sense. Still, volatility is real. The ADA token, which reached $3 in the last bull cycle, dropped below 25 cents during the bear market. In 2025, it trades around 60 to 80 cents a recovery, but still far from its highs. That creates both risk and opportunity. Because if Cardano does realize its adoption goals, its current valuation may be significantly undervalued. Let us look at both sides. In the bullish scenario, Cardano becomes the default blockchain for decentralized identity, public sector infrastructure, and verifiable credentials in emerging markets. Its treasury continues to fund developers at scale. Its governance becomes fully on-chain. Its technical stack, including Plutus, Mithril, Hydra, and Prism, reaches production maturity. Under this path, ADA could see renewed institutional interest as a sovereign-grade blockchain. But there is also a bear case. If Cardano fails to onboard new users beyond government pilots, if faster, more modular blockchains outcompete it in usability, if treasury funds are misallocated or governance becomes gridlocked, in that case, Cardano risks becoming a legacy chain respected but sidelined. So what breaks the tie? In a word, design. Cardano's architecture was built for sustainability. Hydra, the Layer 2 scaling protocol, is now live and processing microtransactions at scale. Mithril enables light clients and faster syncs for mobile adoption. Plutus, its smart contract language, has received updates for better composability and developer experience. And Intersect, the governance body launched in 2023, is maturing into a decentralized governing council for protocol upgrades. This kind of infrastructure is not just technical, it is political. Cardano is building a civil society on-chain. Where other chains focus on throughput, Cardano focuses on legitimacy. And that could matter more than we think. But what about the community? Because no protocol survives without it. And here, Cardano stands out. The Cardano Foundation, Emergo, and Input-Output Global all operate independently, ensuring checks and balances within the ecosystem. Cardano's staking model empowers delegators, not just validators. Its governance tools like Project Catalyst allow anyone to propose and vote on funding proposals. And unlike most chains, Cardano has maintained a civil discourse, grounded more in research and open-source collaboration than in tribalism or hype. It is not perfect, but it is functional, and in crypto, that is rare. So what is the final takeaway? Cardano may not dominate headlines in 2025. It may not offer the fastest speeds or the highest yields, but it is building something deeper. A resilient, academically grounded, globally inclusive blockchain infrastructure. The question is not whether Cardano can compete with Solana or Ethereum. The question is whether the world needs a blockchain built for public trust, not just private gains. Because if identity, compliance, and infrastructure become the real use cases of crypto, then Cardano may quietly become the most important chain of them all. Stay sharp, stay strategic, and keep wayfaring.